Hello and welcome to the FOMC Minutes Preview from their October meeting. At that meeting, the FOMC decided to end their asset purchases, ending QE3 by tapering them by $15 billion per month. So now no longer buying treasuries or mortgage-backed securities. At the meeting, they also decided to keep their pledge, saying that rates will remain low for a considerable time after the end of QE. So this was seen as a relatively dovish move. However, as they ended QE, we did see Fed's Kotler was the lone dissenter, dissenting on the inflation outlook, saying that more stimulus was warranted. So as previously we'd had the Hawks dissent, Plosser and Fisher, this time it was the dovish Kotler. So markets will be looking out for these minutes to see how extensive the discussion was in regards to dropping that pledge to keep rates low for a considerable time after the end of QE. If it shows that there was a strong discussion, they are very close to dropping it, it could be seen as a more hawkish move. In terms of economic developments, with the employment situation improving, it looks as though the first rate hike could well depend on the outlook for inflation. So at the moment, inflation is tracking below the Fed's 2% target, and recent economic developments have suggested that inflation expectations are dropping. So recently the dollar index has touched a 4-year high, and we have seen that rapid decline in oil prices, with both WTI and Brent trading at multi-year lows. So this all comes ahead of next week's OPEC meeting, as I'm sure you're aware. But with these economic developments has led to a decline in inflation expectations, as noted by the University of Michigan survey, which was released earlier this week, which showed inflation expectations dropping to their lowest level since 2010. So it will be interesting to see if the Fed do acknowledge this drop in inflation expectations, where previously they said the outlook to inflation remaining below target had diminished. In terms of the last minutes, they were perceived as relatively dovish, with the Fed citing concerns over global growth and the stronger dollar as a reason for holding off on potentially hiking rates. So markets will be looking out to see if they also keep these factors in. Anyway, that's all from me. I'd like to thank you very much for watching, and I hope you have a great day.